Good morning, students. Today's topic in economics is the market demand. The other name of the market demand is aggregate demand. So concentrate yourself. We are going to read now. It is the sum of all individual demand in the economy. It behaves in a similar way to the individual demand curve. So whatever we have read about the individual demand curves, aggregate demand curve will behave in the same way. The word aggregate means sum, and term aggregate demand is sometimes used to mean market demand. So market demand and aggregate demand are alternate names of the same thing, which means the sum of all the individual demands in the economy. To get the aggregate demand, we simply sum or add up the individual demands for each commodity at each price. So now we are going to read an example that will make your concepts more clear. For example, if we needed to get the aggregate demand for the strawberries, we would add the demand for strawberries of each individual at each price and get the aggregate demand curve for the market for the strawberries. Assuming that the entire demand, that is the market demand for strawberries, is generated by four individuals, that are Mrs. Rose, Mrs. Jenny, Mr. Brown, and Mr. Jude, for a price of £5 per kg. The quantities demanded by each of these individuals are: Mrs. Rose is demanding 7 kg, Mrs. Jenny is demanding 4 kg, Mr. Brown 3 kg, and Mr. Jude 6 kg. So these are the individual demands when the price is £5 per kg. And after adding up all these, that is 7 plus 4 plus 3 plus 6, that is equal to 20 kg. So this is the aggregate demand or market demand of the strawberries when the price is £5 per kg. For the price, for example, when the price rose to £10 per kg, Mrs. Rose is now demanding 5 kg, Mrs. Jenny 3 kg, Mr. Brown 2 kg, and Mr. Jude 5 kg. And after adding all these values, that is equal to 15 kg. So this is the aggregate demand or the market demand of the strawberries when the price is £10 per kg, and these are the individual demands. For example, if the price further rose to £15 per kg, now the individual demands are: Mrs. Rose is demanding 4 kg, Mrs. Jenny 1 kg, Mr. Brown 1 kg, and Mr. Jude 4 kg. And after adding all these values, that will be equal to 10 kg. So 10 kg is the aggregate or the market demand of the strawberries when the price is £15 per kg. So these are individual demands when the price is £15 per kg, and this is the that is 10 kg, that is the aggregate demand when the price of the strawberries is £15 per kg. A graph can be drawn showing the four individual demand curves and the aggregate demand curve. And here is a question that we will solve later, that is based on the data in the example above. Draw and label the diagram showing the four individual demand curves and the aggregate demand curve. So in the lecture above, we were given the individual demand curves at three different prices, that was £5 per kg, £10 per kg, and £15 per kg. We were given the individual demands of Mrs. Rose, Mrs. Jenny, Mr. Brown, and Mr. Jude. So now we will draw the graph of the individual demands and the aggregate demands. And finally, we are reading some key terms. Excess demand, a situation where demand is greater than supply, leading to shortages of the commodities. Excess supply, a situation where supply is greater than demand, leading to a glut of the commodities on the market. So now we are going to draw the graph of the question which is given above in the lecture. So Mrs. Rose is demanding 7 kg of the strawberry when the price is 5 pound per kg. Mrs. Jenny is demanding 4 kg when the price is 5 pound per kg. Mr. Brown is demanding 3 and Mr. Jude is demanding 6. And when the price of the strawberry rise to 10 pound per kg, Mrs. Rose is demanding 5 kg, Mrs. Jenny 3, Mr. Brown 2 and Mr. Jude 5 kg. And their aggregate demand at this price is 15 kg, and when price was 5 pound per kg, aggregate demand was 20 kg. And when the price further rose to 15 pound per kg, Mrs. Rose is demanding 4 kg strawberries, Mrs. Jenny is demanding 1, Mr. Brown 1, and Mr. Jude 4 kg. And the aggregate demand at this price is 10 kg. So if you look carefully at the data at the table, the price is actually up to 15 pound is the maximum price, and the maximum demand in kg, that is 20. So we will draw the graph now, taking the price at the vertical line and the quantity demanded at the horizontal line. So look carefully now. So we are drawing the lines showing horizontal and vertical axis. So the vertical line will be for price, that is maximum is 15. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and 15. And price is in pound. And here is quantity demanded. Quantity demanded in kg. So the quantity demanded is maximum 20. So here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, and this one is 20. And now we will plot the points. So first we will draw the graph of Mrs. Rose. Mrs. Rose values are this one at 5, 7. So here is 5 pound and here is 7. So this is the first point for Mrs. Rose. 10, 5. So here is 10 and here is 5. So this is the second point for Mrs. Rose. And third point is 15 and 4. So here is 15 and here is 4. Sorry, this one is 4. So this is the individual curve of the demand curve of the Mrs. Rose. So join the points with the free hand. So this is for Mrs. Rose. Second is coming Mrs. Jenny. So 4, 3, and 1. So here is 4, that is demand at 5. Next is 3, that will be at 10. And next is 1, that will be at 15. So this is the demand curve of Mrs. Jenny. Next is Mr. Brown. So 3, 2, and 1. So here is 3 that is demanded at 5, then 2 that is demanded at 10, and then 1 that is demanded at 15. So here is the demand curve of Mr. Brown. And the last one is Mr. Jude, 6, 5, and 4. So here is 6 that is demanded at 5, and 5 that is demanded at 10, and then 4 that is demanded at 15. So here is the demand curve of Mr. Jude. And finally, we are going to draw the aggregate demand, that is 20, 15, and 10. 20 is demanded at 5, 15 at 10, and 10 at 15. So 20, 15, and 10. So here is 20 that is demanded at 5, 10, 15 that is demanded at 10, and finally 10 that is demanded at 15. So join these points will give us the aggregate demand curve of the data. So here is the aggregate demand. So this is the graph paper.